So I had asked each of you to submit like one fun fact about yourselves previously, but Alan was the only one who submitted one. So we're going to start with you. So I'd love for you to introduce yourself really quickly and tell us. Well, your fun fact was that you're a Brazilian jiu-jitsuer, so which I have very much respect for as someone who's tried and failed at that a lot. So I have much respect for that. So why don't you give us a quick introduction to yourself and how you spend most of your time right now, and what brings you to Davos?
Yeah, hello, and thanks for the invitation. My name is Alan. I run the business development sales part for GSR, one of the oldest and leading market maker. It's 10 years now in the making. How do I focus my day on? I mean, we are specializing on basically working together with new projects, helping them to go to the market, and then basically helping them developing the market. I think that's the biggest part of the business. I would say in the last 6 to 8 months, we have seen with all the talk around the ETF and the more institutionalization that's coming up, that we have like new people trying to access the space. So we try to be really helpful on that side. At the same time, we're also acting as a corporate VC. So that means we deploy like in project that we think is going to be key or fundamental part of the infrastructure going forward for crypto.
Amazing. Thank you for that. And then Katryna, turning over to you here. So I saw in your bio that you actually have a master's degree in psycholinguistics. So I've never heard of that before, full confession. So I was hoping you could tell us what that is, in addition to doing a broader intro. And if you have another fun fact you want to share, feel free.
Okay, so I was thinking about the fun fact, but the psycholinguistics seems to be relevant. So yes, I was 17 years old, didn't know what to do with my life until I found crypto many years after. So psycholinguistics seemed like an interesting conversion between psychology and linguistic, and that's why I love being in crypto. I represent Wintermute, where they're arguably one of the largest market makers on OTC desks in DeFi, CeFi on the OTC side. My background is I spent almost 15 years in traditional finance. I worked for UBS, for Credit Suisse, for State Street, for high-frequency trading firms. And I guess what brings me here is mostly seeing, familiar faces and looking to make new connections. We are one of the most actively trading, market makers. We provide liquidity on 80+ venues. We trade 350 tokens. Our volumes are 5-6 billion on average. Right now, they're much higher than that. So being in the ecosystem, in the center of it, we just want to make sure we don't miss events like this.
Amazing. Thank you for that. And then Andrey, over to you. One quick intro and fun fact.
Yeah, my life is a fan. So I used to be a mathematician and I switched to finance and traditional finance. So I worked over like more than 10 years also in traditional finance. But then I switched to crypto and I liked it. I like it much more. I think it's a lot of fun. So that's the biggest fun in my life. In Opium team, we are a smaller team, a little bit smaller, but we're trying therefore to focus on most difficult, smartest type of trades. We do settlement for derivatives. It's a lot of options now, and sometimes we work with you guys. Sometimes we compete on MEF and market making as well. So, and in general, I think the market is getting more sophisticated, and that's a very good news because there is structural products, there is derivatives, more complex instruments, and more fun.
Amazing, amazing. And then if you're really dying to know a fun fact about me, it's not really about me per se, but my uncle, I just found this out last year actually. My uncle used to work for Oracle back in the 90s, and he actually sold Jeff Bezos his first Oracle license in 1998. And he was telling me, like, Amazon.com, that's a horribly stupid name. Like, who would pick that name? But anyway. So today we've got a really interesting panel lined up, just talking about, really what you guys do is really kind of like the bread and butter of just market operations and market structure. And we've got, two of the more prominent liquidity, market making, liquidity providing firms, as well as Andrey, you're working on a number of decentralized alternatives. So, and particularly now that we've got ETF approvals coming out of the US, and we're presumably entering back into an upward cycle here. And I enjoy talking to folks in your position because you guys are always kind of at the tip of the spear. Like you see things before I might see it, or other folks in the audience might see it who aren't actively in this area. So Alan, maybe we'll kind of start with you, but we'd love to get from the GSR perspective, what has been kind of the trend line over the last 6 months, just in terms of like activity and volume, and kind of like coming out of the doldrums of this kind of nasty crypto winter bear market that we've been in? Like, what have you been seeing on the front lines, essentially?
I mean, in the last 6 months or the last 3 months, we have seen strong momentum, especially in Bitcoin. I think there was a lot of front running of the expected approval of the Bitcoin ETF. I mean, we have seen the revival of one of Sam coins, like Solana came back, had very strong performance. And then as the approval happened, there was a little shit show around it that we have seen. There was like this hack or fake approval, which is weird. Let's see how that's going to play out down the road. And then you saw the expected rotation, that people were like seeing, okay, now we have the ETF for Bitcoin, then what's next? I mean, if you look at their Ethereum future on CME, they already ordered product in other jurisdiction around there, so we saw like a rotation into that. And then generally, like, we see more and more players actually looking at that space and going into it, also more on the institutional side. I think with the approval of the Bitcoin ETF, we basically got like a rubber stamp. It's an asset class that stays here. I think a lot of the stigma, like it's only for drug dealer and all that stuff, that's probably like 5 years back, or even 10 years back was it actual. It's now disappearing, and we expect a strong maturation in the market going forward.
And then turning over to you, Katryna, would love your thoughts on that same question. And then maybe you could chime in just from kind of the European perspective, right? Because obviously the Bitcoin ETF approval in the US, Europe has had a variety of different exchange-traded products for some time now. But what's the significance of this happening in the US to the kind of the market here, essentially?
Yeah, I guess what we are saying, because I oversee and have a global coverage. So in the US, they're quite restricted, right? So, just the BTC ETF was approved. Here, we've already been trading with some of the ETF issuers who do more interesting stuff, like, for instance, baskets. Or, they're doing kind of more different alts that would never be approved by SEC, who still calls everything a security, right? So from our perspective, we have seen, I think last April, we made it a public announcement that we were the first execution desk for ETC Group. It's a large ETF issuer in Europe. So what we're saying is that Switzerland, we're in Switzerland, there's a very strong Crypto Valley Association. The regulatory regime is much more flexible, much more welcoming. Hopefully UK, where we are based, where our headquarters is, again, they're making some advances, and there's some parliamentary talks about being able to make some decisions much quicker. So in terms of the trends, going back to, I guess, the question, we've done actually our OTC analysis of the last year, and in the second half of last year, our OTC volumes have gone up 400%. So we, during the very quiet stage, we've been building very actively. We've been, enhancing our APIs on the CeFi side, on the DeFi side, and we are seeing that now we're ready to actually capture that flow. And, if I was speaking, even a year ago, I would never believe I would be facing some of the TradFi large names that, I used to cover in my previous FX and fixed income coverage life. But now I'm seeing that, and I think that's kind of good to see, because they can see that even although we're a crypto native firm, we have their, best TradFi DNA in terms of regulatory compliance and OTC execution. So it's nice to see the trend, and hopefully it will continue.
Yeah, and it's interesting. I was just at a lunch over in Davos for the Seehof where Anthony Scaramucci was talking, and he's a character, right? But he was giving some color around how when he was here in Davos last year, he was like, all the conversations I had were just about how Bitcoin's dead, crypto's dead, the stuff's all, it's gone, it's time to move on to the next thing. And then just within the last year, even like 2 weeks after Davos of last year, he said he got like a call from Larry Fink, and the momentum just kept kind of moving ahead despite all of the doldrums that we were in essentially during the course of that market. So like, I think he kind of had the same remarks, but like, wow, I was like really shocked at like how much interest there was, just the orders of magnitude more interest now than there was a year ago at this time when we were all here. So, Andrey, I'd love to get your thoughts on this question, and realize you're kind of operating in slightly different, you're on the decentralized side of things than these two folks, but we'd love to get your thoughts on here, and then what kind of trends are you seeing just from kind of the general market conditions perspective?
Yeah, I think there are funny trends as well, and I agree to everything was said. So 5 years ago, everything was illegal, only for criminals. Bitcoin was designed for criminals. And then gradually it came to #1 priority for most of the banks. That's funny to see from one perspective. From another perspective, somebody can say that once they bought it for themselves, they can allow it to public. And that's maybe also true. So, but that's funny to see. Definitely, the regulation is doing the progress, and I think it's a very good sign. So, I don't believe in wild decentralized finance with no compliance, no KYC. It's not going to happen. So, in order to be big, you need to be compliant to different laws, to different principles. There is, I think, it was never a problem with regulation. It was a problem with too much regulation. When I used to work in a fund and I was on the buy side, it was like over 200 different regulators in total regulating us. And of course, that's a little bit too many. But zero regulation is another bad thing. So another trend, that's technology. Technology is definitely improving. So we see now a lot of intent-based architectures being built as we speak. A lot of user abstraction, account abstraction initiatives, which are really good. All of these running into the kind of next bull market. But what is also funny to see, we discussed it just yesterday, that the volumes came down on a bear market. However, like 2 times or so, and volumes are normally calculated in US dollar. So. It means Ethereum came down like 3 or 4 times. So it means nominal volumes are still growing. So if you look at in Ethereum, for example, it's not so bad. In dollars, yes, but because of Ethereum is getting down itself. So I think it's a lot of interesting trends, very positive trends, and definitely technology, regulation, and general acceptance is coming.
So since the title of this panel is we're exploring liquidity market making in kind of like the CEX and the DEX context, I want to kind of level set here, since maybe I'm not sure like the exact backgrounds of everybody in the room here, so maybe we could kind of do like a little bit of an intro into just like how does like the day-to-day life of a Wintermute or a GSR, like what does that actually look like? What do you guys like actually do? Like what are the guys behind the computers like doing all day essentially? And then would love to get kind of like the decentralized, because you're building up more decentralized DEX protocol. How does that functionality kind of transfer over to a decentralized protocol? But maybe Alan, we'll start with you. Like maybe kind of describe, maybe for layman's terms, like what do you guys like actually do all day?
Yeah, I would try to bring it up what we understand as market making. I mean, you can think about market making just being the act of providing a two-sided quote. So basically bringing up a bid and an ask for a specific asset in a specific size on a specific exchanges. Why is that important? It basically ensures the buyer and seller can execute at prices they like and see on the screen, and it supports the price discovery. The market maker is using some kind of proprietary software or technology, sometimes called bot, sometimes called engine or algo, which basically adjusts the bid and ask based on the price movement. And simply, we try to buy 100, we try to sell at 101, and basically from taking on that price risk that at any point in time buyers can buy and sellers can sell, we get compensated. Now, when we think about market making, it's a very buzzword, and you probably can say a bit more, and there are a lot of shops popping up, and I think one of the interesting stuff is if you look at them, how do they differentiate itself? I mean, one of the differentiators is the liquidity they actually bring up. You need some certain balance sheet to actually do properly the job. Something else is like the experience of the team. I think GSR as well as Wintermute, the background of most of the founders and the employees are in TradFi. So we have been trying to do everything by the book as far as possible. I think that's just for being long-term in the game. And additional stuff is like transparency and reporting. I think there's a lot of, let's see, dark art or misunderstanding what market making is. I mean, one of the often requests we get is like, yeah, please make price go up, but that's basically completely wrong understanding of what the market maker does. It just is, let's say, price agnostic. It just wants to make sure people can buy and sell. What we need is some volume. I mean, in token it's good, in dollar is even better because we need to pay the bills in dollar, and volatility to manage the inventory.
And then, Katryna, if you want to take that question as well, if you have anything to add.
Yeah, of course. Thanks, Alan. You did all the hard work. In terms of what our day-to-day operation looks like, there's around 100 people globally, so 90% are in London. And we have a split responsibility. So we have the biggest kind of teams are actually traders. All our traders are coders. So we don't have traders who don't code. They all have to be able to code, which is very unlike in banking, where you have a segregation, someone codes, and then you just do the risk management and look on screens. So we have CeFi and DeFi team. In a sense, they compete with each other in a friendly way, right? So they're looking for different opportunities to do different integrations. So for instance, DeFi team will be looking at 1inch fusion, and they will be looking at Shell. They do the integration, Shell, they dedicate the resources. In terms of the goal, the ultimate goal, if you were to ask anyone, is just make more money. So, the way we look at it is the opportunities where there's more volume, where there's more ability for us to provide liquidity and see some activity. So as Alan said, we are a seller to every buyer and a buyer to every seller. So CeFi team does the same. They look at integration with new exchanges. So for them, their minimum threshold would be hundreds of millions per day. For DeFi, it might be obviously lower, so they would be looking at incentives. So, very recently, we are very much focused and we're very bullish on DeFi exchanges that look and feel like Clope, like a centralized Clope. Central limit order books is the latest one we've integrated with this Vertex. Or, for instance, RFQ order books or aggregators. Why? Because we don't have impermanent loss, consequences. So essentially, it behaves and looks like a hybrid book where you can do matching and trade execution off-chain, and then everything else, the settlement is done on-chain. And then going to kind of dev team, we still have a team of devs who are looking at all optimization for all of those algos, as Alan said. So that's essentially kind of three directions, which is, again, CeFi market making, DeFi market making, and OTC provisioning. And we're seeing a trend to do more of their aggregation, RFQ order book sort of execution, as opposed to the traditional DEXs. Hope it covers it.
Got it. No, that's great. Andrey, would love to get tell us a bit about what you're building with Opium Protocol, and maybe talk a bit about how what you're building is differentiated from what these folks are doing, and not necessarily it's like one's better than the other, but it's just a different product, different mentality, different value proposition. So maybe why don't you just give us an overview of what you're doing, and then maybe how is it differentiated from maybe what you're doing in your previous job in TradFi and what these folks are doing right now?
Yes, it's a very interesting question because we started as a DeFi protocol, fully DeFi protocol, and it was a settlement layer for all kinds of derivatives. So you can go and create an option to a gold price, or option on Bitcoin, or future on the weather, whatever. So, and everybody were DeFi maximalist back then. They thought, okay, DeFi, that's going to kill all the banks. That's going to be DeFi, period. And we were working on different projects, initiatives. We were with the community a lot. And what I can say now, I don't know if I'm allowed to say this because I'm a DeFi expert here, but I don't believe in pure DeFi, but I also don't believe in pure CeFi. So I think both DeFi and CeFi has advantages, and hybrid approach makes a lot of sense because you need to take the best from DeFi. And what is let's name it. What is the good about DeFi? Composability. So I can use different protocols and compose them, make more capital efficient solutions or cooler products or whatever. Transparency. A lot of users, for example, they like to trade on Deribit, writing covered call options or doing some structured products, some strategies. But especially after FTX, they don't trust centralized, and they want to see where their money are. And that's a very good question. So in DeFi, they can do the same, absolutely the same, not sacrificing anything. But they see the contract where the money are, they see what's going on. And market makers already, like Wintermute was buying from these decentralized covered call auctions successfully, so it works. That's another example. What else is good about DeFi is, let's talk about fusion of 1inch. I think it's genius way of handling order, because in financial system it used to be a lot of order books. Everybody has, so Citi, JP Morgan, everybody has order books. Then you need to, order book is like, has a flow, first come, first served. So then combining all these order books, arbitraging among them, it's difficult. But you have different layers of the clients, you have different prices for different clients, so on and so on. So that's a disaster, and that's not very efficient. In Fusion, you have one order, which is following like Dutch auction, and everybody who can fill it can fill it. And that's completely different solution as many other books are doing something among them and with each other. So that's really cool. So I think this is all good stuff about. I can name more. So, but that's major, and I believe that should be combined with centralized, because centralized will bring us a KYC, some compliance. Some things are much better to do centralized, and this hybrid solution. That's what I believe now, and that's what we are working, and we're doing. You may say pivoting a little bit. Because that's reality. So I'm not DeFi maximalist, but let's say I'm quality maximalist. So in order to have better quality, better financial system, better solutions, we need to be hybrid. And I think that's very interesting, and that's happening right now, because once you trade on 1 inch, you think you are touching fully decentralized system, and you have decentralized feeling. But most of the time you have private market makers participating, and even aggregators of private market makers participating, and that's really cool.
Yeah, I find that super interesting that you do have that overlap now, this kind of hybrid model that's emerging. And at the end of the day, the job of market maker or liquidity provider or whatever it might be is like you're looking for like that, the best. Where can I find like the best order to film, or the best location, the best venue to fill my order, right? And like whether it's centralized entity, whether it's aggregated through something like 1 inch fusion or whatnot. I mean, you're looking for whatever the best solution is. Maybe, Ellen, if you want to kind of touch on this hybrid idea, and maybe how are you guys embracing that at GSR? Like, how are you guys kind of playing on both sides of the fence here, essentially?
I mean, we see our job mainly as providing liquidity, and they're different venue. We can say it's on-chain, it's off-chain, it's DeFi, it's CeFi, whatever the label is. At the end of the day, it's the more venues we can touch into it, the better we can source liquidity, the more arbitrage opportunities are opening up. I mean, I think one big difference, if we think about like off-chain and on-chain, let's say if you're on-chain, we have a lot of transparency. I mean, all the trades are on-chain, you can see it. If you think about an exchange, you basically have either a deposit in fiat or in crypto done, but then everything else is basically an internal spreadsheet that somehow gets moved around, and if you don't withdraw the token, there's anything else. But then the other side of the transparency you have on the on-chain, it's a very nightmare with capital efficiency, because it's automated market making, it's basically a constant product, how the price finding is, and as Katryna already mentioned, it exposes to implement loss, which can be hedged if you're a professional. I think most liquidity pools that are just set up basically get arbitraged and just bleeding money without actually understanding what's happening. But I think that's probably in a few years we're going to all find out. I think with improve on the blockchain architecture itself, I think it will be the possibility of like centralized order books moving much more on the DeFi side, and you're going to see that, and it's basically then hopefully be the best of both worlds. But as we mentioned before, I think the DeFi cannot be accessed by a lot of capital just because it's not compliant. What do I mean with it? I think most regulated entities or institutions which still hold the most of the capital, and I mean institution, not like a family office that has a lot of money but can do whatever they want, but more like a regulated entity, being like an insurance, being like a bank, being an asset manager. You basically need two stuff. You need to be able to see the source of funds. It's very hard if you just trade with a pool. And the other requirement in almost all jurisdictions is basically being able to identify the counterparties. I mean, now we know there was Alpha Arc, and I think some other iteration that tried to do basically closed systems or closed pool, but that's just basically replicating the interbanking market on chain, which hasn't been that successful. I mean, I would say the centralized exchange technology for central limit order book needs to move to the DeFi space to be efficient. And I still would like DeFi to continue, because I think there's two very interesting parts. On one side, it allows for completely permissionless innovation. So you just can run up, you can just spin something up. And the other one, if you look at more long tail assets, very exotic stuff, you just can set up a pool and launch it. I mean, we have seen that with different meme comps, if you like them or not, but I'm very libertarian. I think we should do a lot of experimentation.
Can I interrupt? Because
Yeah.
I have a comment. That's very interesting what you said, because there are two things. First thing is technological. So Uniswap brought us very simple, robust solution of market making, but it's not the best. So it's like really, really simple. So, but it proves that it can be more sophisticated solutions, and what you're saying about order book or not order book, that's cool, and I think it will definitely happen in DeFi, so just more complex market makers. And the second, you're saying about closed system, but I think it's also pretty cool because the closed system can be closed within, like, let's say, Switzerland, and if there is mispricing in this system, there is always a party who is allowed to work in both systems, in open system, in closed system, or in two closed system, and then can arbitrage it between those two systems, having all the legal, and that's probably going to happen.
I will love that fragmentation. We can take. Yeah, we can profit for it. There is always going to be player that can move in both worlds, like the same thing, like player that only can be on a regulated exchange or just let's say on a CEX, so we can go DEX, so you basically can do that kind of arbitrage. I should think in a perfect world it should not be happen, because every time you get arbitrage, someone takes a loss if we take a win. And the other thing is also, like, I mean, when you think about DeFi, probably one point I forget is really the access. I don't want to be too romantic with democratization, financial access, but I think more people have access to a mobile phone than have to banking. I mean, we being in Davos, we basically the pinnacle of, like, financial privilege just to be here. But I just think for the idea that everybody gets access to some kind of financial system and some way to participate in the global markets is at least a romantic, nice idea. But I probably see your point. There's going to be different pools with different jurisdiction. We already see it, like Switzerland being very, let's say, open to innovation. I mean, the CEX listed the first ETPs. We have baskets. We have a lot of cryptocurrency. The US is just looking at ETF for Bitcoin. And you're going to see that for participation, for different kind of regulatory entities, I would say, and jurisdiction. But it's the question, if it's compounding down the road, it would be interesting to hear your opinions. Won't we have the same system than the banking system we currently have? Just trading 24/7, 7 days, every day, but just with isolated pool. Isn't it that what we currently have?
First of all, the regulation going to be much easier, because before you have 200 different regulators, it will take time. So that's good news. Secondly, I don't think it's going to be transparency. Yeah? It's not going to be the same because of transparency. So in 2008, we've seen the problem with the liquidity crisis. Nobody believes anyone that they have liquidity. In DeFi, you can see that, okay, there is a liquidity. So does it sound your question, or you have something else?
You know, it's a fair point with the transparency. I mean, we had a lot of financial crisis. I mean, if you look back to the mortgage crisis, basically a lot of stuff that gets repacked and repacked and repacked, that nobody has an understanding who owns what, to whom. That hopefully shouldn't happen. Wondering if there's going to be technology on the privacy side that will allow for the same kind of architectures coming up. If we think about restaking, where you basically loop and re-leverage. Okay, I mean, at the end of the day, if you do the homework, you're always going to see the transparency, how it's linked. Yeah. The question is, will the transparency be sufficient to understand the consequence once the dominoes start to fail?
Well, if there is enough transparency in the balance sheet of the company, somebody can say yes, somebody can hire accountants, but at least it's available. So here's the same. So at least it's available. You can hire a company who can do analysis for you and saying, okay, this is really high risk. It's much better than having a black box, right?
Absolutely.
And of course, it's not financial advice, but I think this jurisdictional arbitrage is really cool. So you mentioned you like to make money out of it, and I think it will continue for some time, just arbitraging between different jurisdictions, between CeFi and DeFi. And again, not financial advice, but people should do it more. So far, let's make money ourselves for it.
So we've just got 2 minutes here. So I'm gonna have one quick question, and I'd like to just get some, kind of pretty high-level predictions from you three for the rest of 2024. Like, what are some of your narratives or things you're watching for the rest of the year? But one of the big trends of crypto of last year, 2023, was this idea of like real-world assets and bringing real RWAs on chain and things like this. And one of the promises of tokenization in this regard is that, like, you can have higher liquidity for things that are like kind of previously illiquid, like tokenized, a fractionalized, condos, apartment in Davos or something. That's whatever. That was normally not very liquid, but like if you tokenize it and you can trade it. Obviously, we're still in kind of early stages on some of these ideas, but just wondering if any of you all, if your respective firms or entities have experimented or have begun kind of thinking about how do we expand into providing liquidity for real world assets beyond just magic internet tokens, I guess. Whoever wants to take that.
Okay, I can go first. I guess, yes, it's a very common narrative right now. The way we express it is through our investment arm. So we have a small VC arm, which is all corporate capital. In terms of kind of being able to trade them, we do get approached a lot, and it's always very difficult because when people say, hey, we're listing this token, there's going to be RWA token, the problem is the oracle. Because we are crypto native, we are not yet connected to all the possible data sources in the TradFi world to be able to actually price it as well as hedge it, right? Because again, if we're completely honest here, DeFi is still such a small part of their, crypto assets as a general. Like if you look at comparatively, I think it's like around 10-11% of the total trading volume. And although the trading volume daily is going up, let's say right now it's around 50 billion daily. If you look at the FX spot, it's like 7.7 trillion, right, daily turnover. So it's still very, very small fraction. So going back to RWAs, always the problem is the oracle, or can you hedge it? Other efficient markets, and I think there's still not enough bridging. But also, again, kind of maybe not to sound controversial, based on the working groups that I participate in, I don't genuinely believe that, for instance, the big, tier one banks will be looking to trade those assets, right? They're looking at it as tokenization of the traditional asset classes, right, or that they already have for all the benefits that there are, which is, transparency, or, compliance, or, full visibility, so that you don't get that, similar situation as Archegos, right? I was at my old show Credit Suisse, where the same fund and the same balance sheet was double pledged, triple pledged, and quadruple pledged, right? That would lead to the fall of Credit Suisse eventually. So for us, we look at it as well. It's an interesting, area. We want to invest, but in terms of trading, in terms of liquidity, it's absolutely not there yet. For us, again, if someone comes to us and say, hey, can you execute this NFT, we would still go and manually trade it on the DeFi. We wouldn't put the automated execution strategies. If it's top 300, 500 tokens, yes, we can possibly do that. Maybe a VC invested very early on, and if there is a liquidity source and possibility to hedge, we can hedge it. Otherwise, we can't just, create a price, as Alan said, we can't just, artificially inflate the price of volume. So again, even going to CeFi, the big problem we see with a lot of the CeFi venues, how much fake volume is going through there, how much illicit activity, anything that is not compliant, i.e. wash trading and so on and so on. So in terms of the narrative, I think it's convergence, but also, a lot of it is still going in parallel. TradFi is doing TradFi things, like JP Morgan coins, they wouldn't welcome crypto natives there. Why? Because they don't want to share the piece of pie, right? It's a transactional based infrastructure, and it's only for the TradFi names. And then whatever crypto build is more exciting, interesting, complex, but also I don't see it converging yet.
Amazing. Really quick, I mean, we're out of time here, but if you just want to chime in really quick, that question.
I would add what Katryna said. I think it's more on the VC side. It's very interesting. I find it always interesting. People come with very exotic stuff like real estate or wine or Picasso, stuff that's generally not liquid in the TradFi world. And they just expect if they put a token around it, it somehow becomes magically liquid. I mean, that didn't happen with securitization. It's not going to happen with tokenization. And I think when you look at it, I mean, one of the biggest tokenization is stablecoin, basically the FX market. Onchain is probably also one of the most strong use case out there. And I think when we then look, what's the next one? You have a dollar. So now you would have a dollar that gets interest. So I think, I mean, Franklin Templeton did some US Treasury tokenization. So I think that's tough. But I think when you look behind the curtain, how that's done, it's all often done in form of a legal hack. You set up some SPV and the token represent the unit of the SPV. So it's as long as you don't have the legal framework that you actually have a token. Like in Germany, you can have a fund unit that is represented in the form of token. In Switzerland, you can do it for privately held stuff. So that's a little bit a missing piece. And then I just think crypto is very interesting because of a lot of fantasy and there's a lot of volatility in it. I mean, if we securitize that building, it's probably going to have the same value as if I would sell it to you in paper form or whatever it is. I mean, we can add a little bit of premium because the handling is easier, but I think there's a lot of regulatory bottleneck, a lot of, let's say, yeah, Oracle is another one, but I just think if we go down from the affix, then make it yielding, and then end up with the exotic one and not completely start with like tokenizing old timers and suddenly they become super liquid. So I would be careful if you get chilled stuff like that.
Okay, it's good advice. Thank you.
We're running out of the time, so we'll be very short. I think for the real world assets, composability is very interesting because sometimes it's illiquid, but still you can have some borrow money against it, very little at least. So, and that's much more efficient on DeFi and probably going to be better and better. And another thing that the tokenization is happening, I agree. So we all cannot live without, DeFi cannot exist without stablecoins, and stablecoins is the biggest tokenization of US treasuries. So for now, they're not allowed to give you interest. They have to keep it themselves, suffering and keeping all these interest coupons, payments. But it's already happening. So the question is what's next and what's next.
Amazing. Well, thanks to everybody. Andrey, Katryna, and Alan, thank you so much for being here today. And we accomplished something really tremendous here. We made it through a whole panel without talking about artificial intelligence. So nicely done.
Bravo!
We can talk about that later if you want. But first panel in Davos so far that hasn't mentioned AI. So very good. And thanks to 1inch for hosting us. And maybe we can do like a quick photo op.
Thank you. Let's do a lot of applause for our panelists, please.